Oh boy, here we go again. Back to work tonight, guys. Wednesday evening, and boy, do we have a lot to cover in a very important video newsletter. We're going to Thursday, not just any Thursday, the end of the week Thursday trading session. I have a lot of great trades I'm tracking for tomorrow, and I want to make sure that you know how to make some money on Thursday. I'm going to cover all my favorite trades tonight, that way you know exactly where my favorite trades are setting up for tomorrow. We have a lot to cover tonight. Before we jump in, though, and get this game going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. Hit that like button if you guys enjoyed the content here tonight. And as always, appreciate you guys tuning in. Give me a shout out in the comment section if you guys enjoy the content here tonight on the video. But enough of the intro, though. We got Thursday coming right around the corner. And I'll tell you, boy, it's tough to tell exactly what to expect tomorrow because that day off on Friday. But I'll tell you, we get some really, really great potential trades setting up here for tomorrow. Where are the best trades? Well, the S&P and the Nasdaq are pretty bearish overall right now. The bears got their hooks into that short-term momentum on the Emini and the Nasdaq. We have one of those, not so rare, but one of those kind of challenging situations right now where we have a very bearish short-term market on the S&P and the Nasdaq. But you will see tonight the higher time frame charts are still screaming buyers in control. So with a short-term bear market, long-term bullish market, I'm looking for reversals, I'm looking for short squeezes, and I got some key areas on my radar where I'm looking for short squeezes here. Now, let's face it, right? We're pretty bearish right now, so in order to pick bottoms, in order to trigger these short squeezes, we need three specific components, and we'll talk about the three rules, how to time those perfect squeezes. We're going to cover those in good detail tonight on the S&P and Nasdaq. And if I'm wrong, if all hell breaks loose and things fall apart tomorrow, I got a game plan on that for you too. I'll keep you covered going to the end of the week. Over on oil is stubbornly still trading sideways right now. Everybody is still waiting for those bear traps down around 79, 78, and some breakouts going higher. We have a very similar game plan on oil, but we'll talk about that as we go deeper into the video here tonight. Now, speaking of tomorrow is a Thursday, but it's going to feel maybe like a Friday. What's the big news for tomorrow? Nah, it's not the jobless claims report. Nobody cares about that anymore. It's the James Bullard speech at 10 o'clock Eastern time. You know, everybody wants to know if they're changing their mind on their rate hike policy. That's definitely the big news, the big potential market catalyst here for tomorrow. Also, too, don't forget, markets are closed, right, on Friday. Most markets are. I believe the E-minis are open, I think, until 9:15 or something like that. This is unprecedented where we have a huge news report like the non-farm payroll number coming out at 8:30 Eastern time, and the market's being closed up. I believe they're going to close up shortly after that news comes out. That really creates kind of a question mark for tomorrow. You know, will the big money sit tomorrow out? Will that cause some potential low volume runners? You know, tomorrow's a Thursday, but it'll be traded like a Friday. And, you know, Fridays are notorious for running. You know, my goal on a Friday, and again, tomorrow's a Thursday, but it'll be traded like a Friday. My goal on the last day of the week is to get in early and try to leave a little piece right open because, you know, Fridays love to run. End of the weeks, they love to run. So my goal tomorrow will be find trades early tomorrow morning. I'm very curious what to expect tomorrow with that end of the week on Friday being closed up in a big news event. But you know me, right? We always seem to find some good trades no matter what the market throws at us. So tomorrow morning, 8 o'clock Eastern time, don't be late, get in early, try to leave a little piece of it. And I wonder if the volume will dry up a bit, you know, towards the end of the session tomorrow. And I wonder if we're going to get some of those big kind of floaters that we oftentimes see on Fridays. But anyways, that's the schedule for tomorrow. Back to our charts, though, because, of course, the money is made on the charts. Guys, I'm going to go over each one of these charts, S&P, Nasdaq, Crude Oil, talk about my favorite trades for Thursday. If you like making money, I would definitely watch all the way to the end because I will find a way to tie it all together here today. Every trade I talk about can be applied to your favorite market, so don't just click off after we're finished with your favorite chart. Now, over on the S&P, we'll go S&P, Nasdaq. We'll wrap tonight up on on the crude oil futures. Couple things first here, guys. These are all tick charts. I use tick charts on all of these charts here tonight. This is the 21 EMA, in case you're curious about the indicator on the screen right now. And as always, down the description of the YouTube video, I'm going to link up some 60-minute time frames, some 4-hour time frames, and these might be the most important charts you can look at as a kind of a partner or companion with this chart in front of us. I mentioned in the introduction that we are obviously short-term, very bearish right now, but it's difficult to look at a 60-minute chart right now and say we're not a bull market. So that's the most important factor right now, right? The most important factor is we have a bearish short term. There's no doubt about that, but we still haven't got that separation off the 21 EMA that we talk about in our video classes that really signals a reversal. So I talked about the fact that I'm looking for squeezes, right? I'm looking for reversals, and we need really 3 different components, right, to trigger some short squeezes. But first, where are my favorite trades for tomorrow? One of the components of a short squeeze is you have to find major turning points, right? And so my favorite trades are going to be reversals, right? Off of the 4109, reversals off that 4099. I also would love to see possibly some squeeze start overnight, right? And get some reversals going higher there. That would be a little bit easier, but that's also on my game plan. So right now, let's talk about what are those 3 components, right? What are those 3 components to look for? 1 is a major turning point. 2 are signs of exhaustion, and 3 are some sort of catalyst. Now, what do I mean by that? Well, first of all, we're very bearish, right, in the short term. So if I want to be a buyer, I don't have momentum to give me an edge, right? If we were very bullish right now in the short term, we'd have all of that bullish momentum to give us some sort of edge over the sellers. I don't have that edge right now. So I'm going to need to basically trap the bears in when they try to sell short into support and use their stops as fuel. Now, in my free trading course, we talk a lot about failure patterns, right? Failures and bear traps. This is where we're going to use a bunch of them, or hopefully use a bunch of them here for tomorrow. Now, my failure pattern, I talk about getting sellers underneath the 21 moving average, trapping them in, right? Letting them sell short off the EMA, and then trying to basically buy into their stops, right? I talk about failure patterns into pullbacks, into strength moves, into trap setups, right? We call this the price action cycle. You guys are learning this right now inside the free trading course. But listen, real quick though, there's a slight variation on this, okay? Because we are so bearish, we need to give the sellers the benefit of the doubt. See what happens over here? They go lower. See how bears try once, try twice to keep it going lower? Okay, that's the gimme. That's the rule, or that is the trigger we need here. So step 1, let's get down into an area of support. Step 2, let's see signs of exhaustion. I used a 2-try rule for this. This is a slight variation of that failure pattern you guys are learning in the free trading course. That will get a few more sellers roped in, and we can use their stops, and the stops are the catalyst. Remember, you want a major turning point, right? Support level. You want signs of exhaustion, 2 tries, and some sort of catalyst, right? Because we need some fuel to get that, in this case, the short squeeze reversal going higher. I would love to get, right, one of my favorite trade for tomorrow is trap those bears in underneath prior swings. It could be here. It could be under this guy, running them lower, right? Remember, think about this. If sellers are foolish enough to sell low, right, into these lows right now, their stops are just waiting to get hit, right? We can grab those again. Remember, think about 2-try failures, just like you're learning in the free trading course. One of the best reversals would be if we go all the way down to retest that low overnight, then get some traders coming in, get some sellers coming in, let them try a couple times. Oftentimes these double bottom variations of these failures are the ones that really trigger, right, the big reversal. Now watch how I do it this way though, right? Again, we take the low out, the bears come in, they try a couple times, we get that nice signal candle we talk about in the free trading course. And then think about this now, as we go higher, right? As we go higher now, where do you think the buyers want to go? They're going to want to go in and take out that big high, right? Bottom of that trading range. What I'll do is in this situation is knowing where the buyers want to go now I'm going to go out, I'm going to find a new channel off the highs. See how I draw that backwards like that off the high, bring it down off that low, and then what do we always say? First test is the best test off the low of that channel. Okay, and this could be a bear trap like I'm showing right here. It could be a seller failure pattern like I've shown a couple times already. It could be a pullback combo, a strength move. I just want to get into that thing before we take out that high. And remember, tomorrow, end of the week scenario, I will try to leave a runner as we go. Now, speaking of the free trading course, I know that most of you guys are taking that free classes or you've taken them already. You're making money with these failures, running stops, trapping traders. It's the easiest way to make money, right? Using stops as fuel. But listen, if you're one of the few folks watching who haven't taken that free class yet, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link that popped up there. Take that free trading course because the strategy I teach in that free video series will show you a simple trick to know exactly where the best winning trades are going to be that day. And I'll teach you 4 different entry patterns to help you start making money on your own out there. If you're missing the best trades right now, if you're taking too many losses, definitely grab that link, take that free course. It's perfect for someone trying to make the jump into full-time trading. Now, I want to talk about the squeeze going higher, right? I want to talk about if we open up and just slide going higher here. But real quickly, though, before we talk about the move going higher here, what if it breaks down? What if it breaks down? What if I'm wrong about getting these squeezes here? What if we end up breaking down here? This is where, again, you need to go lean on that 60-minute time frame. On the S&P, we have a range right underneath us, and markets love to go. Remember, we had this big run up. Remember, and you'll see this in the 60-minute. We had this big run up last week. There's a good chance this whole thing is just one big pullback after that big run up. The big variable for tomorrow is because Friday is a day off of that big news. The real big variable for tomorrow is will the big money, right? Will the big players, will they come and will they come to the playground tomorrow, right? That's really the big question as far as whether or not we'll get that full squeeze or whether we can tread water tomorrow. I hope we don't. We'll obviously do whatever we can when we get tomorrow morning. But the bottom line, though, is if we do end up taking out these lows and make an aggressive move down here, right? If they do end up shooting, because again, it's very short-term bearish, I am still, unless something dramatically falls apart tomorrow and we see this thing accelerate going lower, we'll put the pieces together for that tomorrow, the trade room. But if it really accelerates going lower, now what you want to do is you want to think about, again, we got a lot of support levels below us still on the 60-minute. We're still overall very bullish on the 60 unless things completely fall apart tomorrow. If we do make the run lower, though, this is where you want to make a slight variation to the game plan, right? This is where crown reversals come in handy. What's a crown reversal? A crown reversal is nothing more than a 2-try failure with a bear trap. That's all it is, right? We talked about kind of trapping the bears in, right? Okay, remember, 3 components. 1, major turning point. 2, signs of exhaustion. And 3, right, is that squeeze, the catalyst, using stops as fuel. The reason why you want to look for what I call a crown reversal pattern, which again is nothing more than a 2-try failure, right? It's a more advanced variation of the same failure pattern you guys are learning in the free classes right now, but you want that trap low. And the reason is because if they really run this thing lower, they're going to want to pull it back and retest that low. And so you've got to protect yourself, right? Right now, we had that strong run down. They already retested. So now we can be a little more aggressive, right, on these squeezes going higher, right? If they rip this thing lower overnight, they're going to want to go and retest that level. Then we can be a lot more aggressive with a 1, 2, buying the stops, right, looking for channels and punching it up right back to these areas above. But if they just rip it lower here, okay, and again, I'm just being realistic with kind of the unknown of what may happen tomorrow, right, because of that day off on Friday. If they rip it lower here, think about the crown reversal, which again is the same basic idea, or let them retest that low. Once they retest the low, then, like I mentioned over here, then you can get a little more aggressive, right? Remember, you're at a major turning point, right? You get signs of exhaustion and you run those stops. And, there'll be some variation of this tomorrow morning in our trade room. That's why we have a trade room, to make sure we can kind of fill in any of the gaps there. So just be aware of that as we go lower. And again, unless things completely fall apart tomorrow, which could happen, but the odds are not very good that it will. But it could happen. If it does, we'll obviously go into more detail tomorrow in our trade room. Let's talk more now about if we run higher here, okay? Because there's a range above us on the S&P. Again, look at the 60-minute chart, and you'll see, right? It's quite easy to see this S&P especially is still quite bullish overall. Let's grab some Nasdaq right now, right? Nasdaq had a big move down today, right? Now, normally you look at this and go, oh my goodness, right? We're very bearish right now. But I want you to go in the description and I want you to look at that 60-minute time frame, and I want you to see the last two ranges we've seen on the Nasdaq. Okay, this is exactly what the Nasdaq loves to do in a bullish market. You'll see we had that range about a week and a half ago, right? Pops up, chops around, sharp move lower, and then what did that do? It squeezed the following day. Again, we are very bearish right now, but when you look at the longer term time frame, just a 60-minute time frame, not that much, not that much higher time frame, you'll quickly see here we're definitely not a bear market just yet. Again, could change tomorrow, right? But unless things really begin to fall apart tomorrow, and again, tomorrow really is kind of the question mark, because we just don't know how much participation we're going to get. Nasdaq is very similar to the S&P in most cases. The one thing I would say the Nasdaq is a little bit different than the S&P is the S&P had that big move down and they had already retested. The Nasdaq still, I still believe the Nasdaq has a little bit more. It is a little bit more, obviously a little more bearishness, but I don't believe that shallow pullback right there is enough to call this a retest. If you're a student of mine, you know what I'm talking about. Whenever we see a big move down like this, we expect to get a pullback and a retest. So it's the same basic game plan of looking for short squeezes, but I would say the one kind of key difference on the Nasdaq is I'd like to get one of those crown reversals on this level. This would be the one I would like to get, that crown reversal. Once they retest the low, okay, then I can start going in, trapping those bears in. It's just a slight variation of what I just talked about on the S&P, right? Hopefully that makes sense. And again, on the Nasdaq, we've got more big levels of support below us. So if they really shoot this thing lower, it's that same thing, right? Signs of exhaustion, catalyst off a major turning point there. And again, I know I'm covering a lot right now, but don't worry. You'll learn all the basic principles of this stuff inside that free trading course. The failure patterns are a big part of this. Now, let's talk about if this market now begins to pop higher. The most important thing in the Nasdaq is we have to think of this area as being the key objective for the buyers here tomorrow, right? That 13,160 to 13,180 area, right? That is ultimately the underbelly of that trading range. Remember, we had that huge move up, right, last week into that range. That range is the big magnet. That is the North Star right now that makes us think this is nothing more than a deep pullback. It's not a full-blown reversal. So we have to think that area right up there, right, that's going to be kind of the short-term objective. The big objective, obviously, is go all the way back up to that high. But let's chew on one bite at a time here. 13,160 to 13,180 is where these buyers would love to get to. We talked about how to pick that bottom using those three components, right? Now, as we go higher, what you want to be thinking about here, and this is the same thing pretty much on the S&P, but you want to be thinking about in the short term, you want to look for bear traps. And the reason for that is because as we're going higher with all of that bearish momentum, we have to assume that as we go higher, more bears are trying to short this thing and run it back to retest that low. So as we go higher, I'm looking for a very simple pattern here. And again, this is the same stuff you guys are learning in the free course. It's trap patterns. Okay, traps my favorite whenever we're kind of rising higher, especially with short squeeze situation, like I'm illustrating here right now. Now, once we get up into that area, though, now unless things just completely disconnect and keep on ripping, which is possible. But let's be more realistic here. As we get up around this key area of resistance, we expect who? We expect more bears to come in. It's nothing more than a breakout pullback, right? In that area. So now we want to ease off the gas pedal and now start looking for some larger channels, right? Some larger channels. And this is why I always say, when you're looking for a move higher here, you want to buy bear traps and pullbacks, right? So as we're going higher, bear traps, right? Trap patterns, we go higher. But then as we start getting too high up here, right? Once we start going one leg, two leg, three leg. Once we start getting three legs higher, trends love moving threes here. Now we don't want to chase it anymore. Now we don't want to be so aggressive. We want to let those bears come in, let them try to sell into it. This will probably also be an area where buyers will take profit, right? That's where I would like to take some profit tomorrow as well. And now we're looking to get underneath the moving average. Okay, at this point now, remember, at this point now it's a bull momentum now, right? So now we only need that failure pattern. We don't need the 1, 2. The 2 would be great, right? We don't need it though. At this point now, momentum now is both bullish in the short term. Momentum is both bullish now in the long term as well. And now we can get a little more aggressive there with things like a failure pattern into a pullback combination off of that low. Make sense? Right? So this is the general mindset. If we do get this thing to kind of float and flutter here overnight into the pre-market tomorrow, into the opening bell tomorrow, right, is again, as we're going higher here, looking for bear traps, and then as we make our way back up into this overhead resistance, we expect to have some bears coming in. Right. We also expect to have some profit taking for the buyers. Price will pull back, and likely we'll get some bears who will think this thing is still bearish. They'll sell into that moving average. We can use our stops as fuel, right? Grab some pullbacks and finish off, right, that move back up into that trading range. The only question is how big the window will be tomorrow, how much volume we're going to get. That's the only question we have right now. But that scenario seems very likely. Now, keep in mind too, right? We may end up going lower first, trapping those bears in, and that may punch right into that move here. Let's talk about some of the variations of this, because there's a couple of ways to do this. Another variation, for example, if we went lower, trap the bears in. Let's say we trap the bears in and it just punches. Oftentimes when it punches up like this and it's a short squeeze scenario where bears are going to be getting out of their positions on this, most likely, the market will oftentimes try to flutter, right? Well, not try to flutter, it will flutter. That fluttering, right? That grinding higher is the giveaway that bears are walking away from this. These are not buyers buying up here, right? The buyers want to buy low. These are sellers who are seeing this thing break down, looking at a 60-minute chart in the corner of their eye, seeing that range way up there and going, oh crap, right? I'm on the wrong side of this. They start getting out. The market flutters and kind of grinds higher. We can now mark off that high. We can now mark off that low, right? And then what do? We look left. We find prior swings, exactly. Swing levels. You almost always find the best entries by looking left, find a swing. Swings are where traps live. Get below the 21 moving average. Look for a failure pattern, right? Like you guys learn the free classes, failure, pullback, and go from there. Now, obviously, I'm gonna draw this up right now, right? There'll be some other variation of this tomorrow. I mean, I'm pretty good at this by now, but I'm not that good. Maybe I'm that good, but the bottom line is we're looking for some variation of that, right? So again, it could be right here. It could pop up and begin grinding, right? It could be right there, right? For all I know, I don't know, right? All I know is if it pops up and begins to grind here, you know how to find that channel, and you know where the best entries are. And again, you'll learn the specific entry tactics in that free video course, like I keep mentioning. All right, guys. The only other kind of variation of this right now is, again, if we take out that low, right, going to trap in those bears, wind up popping back up, and maybe this ends up being some sort of range, right? Maybe we never end up getting that squeeze. maybe they hold off the high, buyers try a couple times and, float back down. This range may end up being very stubborn tomorrow. Again, it's a huge question mark with how much participation we're going to get ahead of that, big non-farm payrolls on Friday. So if we do start seeing this thing flesh out into a range here, we're going to buy low, we're going to sell high, we're going to keep on using those, again, those three components, right? Major turning point, signs of exhaustion, and running stops. And of course, we'll do it together tomorrow morning in our trade room. I would say the same thing goes for the S&P as well, right? If the S&P begins, if for some reason we start to flesh out some sort of range tomorrow morning, right, we might get that range pop down, squeeze back up, right, trap the buyers. And you know what I mean? There might be a range here, and we talk about ranges all the time, of course, in the free trading course. So the basics are there for you. But that's kind of one variation, again, with that big news on a Friday holiday weekend. A range could be possible. We may not get the actual squeeze, and unfortunately, until Monday. But I'm looking for it. And again, when you look at those higher time frame charts, you'll soon see why. Over on the oil tonight, we'll wrap things up here on the video tonight with the oil here. Oil stubbornly still trading sideways right now, not really giving anybody a chance to do much with this market right now. We have that massive gap up when OPEC cut production by 1.6 million barrels over the weekend. We've been chopping around, going sideways here into a trading range. Now, we've talked a lot about the 60-minute charts in the description of the video tonight. When you look at those 60-minute time frames, you're going to see there's this big channel, right? Oftentimes what happens is you get these really big moves up. And because the move is so big, nobody wants to buy it. Nobody dares to sell it because it's so darn bullish. And oftentimes the market will chop and chop and chop. And all of a sudden, bam, right? They'll hit that channel, and that will be enough to kind of, right, jolt it out of its slumber here. That is something we're tracking. And again, the big question for tomorrow is, will it be tomorrow? Will it be next Monday? You know what I mean? That's the question right now. That is definitely something on my radar right now on the crude oil, and you'll see that on the 60-minute. The two trades you're looking for right now on oil, and this is nothing new from earlier this week. We want to get that deep pullback, close some of this gap, right? Get some of this gap sopped up a little bit, trap in some bears, right? And then back up, right? So bear traps as we go lower. I've got some pretty good spots to look for. I've got the amount above the range projected down below the range. I like that area. I really like this whole area right here between 78.66, 77.68. That to me is the sweet spot on this chart. Really anything though underneath that 79, right? Anything underneath that 79 really in my eyes is probably going to be seen as a buying opportunity. The key will be, once again, using those three kind of keys, right? Major turning point, like that 79 area. Looking for signs of exhaustion, trap the bears in a bit, use their stops as fuel, right? 1, 2, 3. Okay. Again, major turning point, trap the bears in. The only kind of variable on this right now is do we see a very strong run? Who knows, right? Remember, oil is still very much susceptible to news headlines out of China, especially out of Ukraine and Russia, right? So this is very news driven right now. If we were to see a very strong run down, remember, anytime we see a strong move in one direction, what do we expect? We expect to pull back and a retest of that level, right? Stronger it is, the more likely for that retest. So, if all we get is a really kind of mild pullback here, yeah, trapping the bears in, let them try a couple times and buying those stops, it's a very viable setup. If it just rips lower though, this of course is where you want to start thinking about crown reversals, right? Which is nothing more again than a 2-try failure, but because of all that short-term bearish momentum, we want to try to buy as low as we can. Either that, or we have to wait for the run lower, like I mentioned in the Nasdaq, right? And again, both of these can apply to the Nasdaq and the S&P as well. If it shoots lower here, right, the bears may come in, try to hold that pullback. They may actually get that retest like they did on the S&P. Not quite there yet on the Nasdaq yet, but once they get the retest now all the bears who sold that pullback, now they're taking their profit, right? So now it's what we always say in our trade room is mission accomplished, right? Mission accomplished is to retest that low. Once they retest that low, okay, now again, major turning point, that low a day, right? 2 tries are signs of exhaustion, and the catalyst is a stop run. Now remember, when these things double bottom like this, and again, this same exact pattern can be applied to the Nasdaq and the S&P as well. When they double bottom like this, they oftentimes will punch, right, and really rip and go higher. We know where the market wants to go at this point. Now it's a matter of just finding an entry, right? It's kind of a mad dash to find the entry now before we go back into that range. So I draw a trend line off the high, I mark it off that low. And again, my favorite trade on this, we talk about this in the free classes, right, is I love the traps, right? I love that, what I call the first test trap off of that low. So again, we're trying to rope in the bears, stops as fuel for the squeeze right off that low. And then as that momentum turns, it gets a little bit easier because now everybody kind of sees the turn and people will get a lot more aggressive right on that entry off that channel. It could be a bear trap. It could be a seller failure. It could be a bullish pullback setup on a faster time frame, obviously, right? This is a 3,000 tick chart. We'll talk more about smaller time frames, higher time frames inside of that free video course. All right, so that is the game plan, right, as we go. One other variation you want to look for is the V bottom, right? If we were to plunge lower and then V bottom off that low, sometimes these V bottoms can be waiting, they can be tricky because there's probably so many buyers waiting down there. If they get that V bottom, we just simply draw that chart off the high, bring it off that low, right, and then go out, look left, and find those traps, right? Find those traps off of that low. And again, it could be any of the entry patterns. I like the traps the best, and you'll learn why I say that in the free video series, right? So if it V bottoms and begins to grind higher, and again, this all can apply to the S&P and Nasdaq as well, then we look for that trap off that low of that channel, all right? Going higher here, we've talked about a couple different variations earlier. I'm not too keen on shorting this thing this time around if it goes higher. And the answer for that is, the reason why is because we already retested the high here, right? We should be pulling back right now. If we keep going higher here, I have very little interest in shorting this thing. That's a very bullish clue. We talked about the bears failing their rotation in last night's video. Remember the idea, right? As we go higher, in the short term, you're looking for bear traps. But as we start getting a bit higher up, now we start thinking about, okay, where are larger channels getting those deeper pullbacks and trapping in, right, those bears, right, below the moving average. Again, this will probably not happen exactly like I'm drawing it right now. I'm not that good. I'm pretty good, but not that good. All right, there'll be some variation of this tomorrow. Remember, the markets are never that black and white. There's always some gray area variation to it, right? But the principles are what you want to be aware of. As we're going higher, bear traps. As we keep getting high up, right? As the buyers start going, okay, now take some profit. Then we wait for that pullback, get below the 21 moving average, find that channel, trap the bears below the 21 EMA, use stops as fuel into pullback, into strength, and then we're looking for, really at this point, right, it's very tough to tell how far this market may go. One thing I always tell my students, and I'll tell you here as well, whenever we see like a, for example, another breakout pattern would be a pop-up, a pullback, right, and a jump off of that moving average. This is another variation. We call these 1, 2, 3 breakout patterns. Okay, this could happen tomorrow on the S&P and the Nasdaq. It seems more likely though on the S&P and Nasdaq you're going to get that pop and grind, right? That seems more likely because of the short squeeze scenario. But if we do get a pop up, I'm not going to buy that first pullback because you're buying right into that high with a range below you. So you don't want to buy the first pullback, but if we can get that 1, 2, and then jump, right? Now we have all of that momentum. Remember, anytime we see a strong move, we expect what? A pullback and a retest of that high. I want to find a way in now on that pullback. It's a much higher percentage trade than trying to buy that first kind of breakout pullback, right? So what I'll do is I'll mark off that high, I'll mark off that low, right? Go out, look left, find some swings, get below the moving average. This part is the same though, right? The entry technique is the same. What changes here is simply how you draw the channel. It all depends on how the price action gives you. All right. Now, one last thing, and we'll wrap things up, is if we see a breakout, remember the first leg and the third leg are usually very symmetrical. Okay, first leg, third leg. I mentioned earlier that trends love threes, right? So one leg, two leg, three leg. Okay, the first leg, the breakout leg, which of course is what I'm trying to draw right here, that first leg will be very important because that will tell you, once you get that pullback here, that will tell you where to anchor that measurement off of. Hopefully that makes sense, right? So first leg, once we see that 1-2 pop, okay, that sets the stage, and now we go out, look for the entry off the low of that channel. Once we see the pullback to that channel low, then we go, okay, now we know where to put the exits because now we have the size of the first leg, size of the third leg. Okay, again, that's the basic principles here for tomorrow. We're probably going to see some variation of this. I just really hope that we get enough volume tomorrow morning. It very much is a scenario I cannot recall the last time that we saw a big news event like non-farm payrolls on a day when the markets are completely closed. We don't oftentimes see markets completely closed, one of the only times of the year. Don't forget, though, no video tomorrow night. Friday, of course, is a day off. Have a very happy holiday weekend. A very happy Passover as well to anyone who's celebrating here as well. To all my Jewish friends out there, have a very happy Passover. Have a great Easter weekend. I will see you guys tomorrow morning in the morning trade room, 8 o'clock Eastern time. No matter what happens, we always seem to find some good trades, right? The big variable, though, is how much volume will we get as we go into a very unprecedented holiday weekend. All right, guys, I'm out of here for now. Hope you learned a bunch. Hope you use this to make a killing tomorrow. You can buy some Easter eggs for the kids. Guys, don't forget all the free classes, right? All the free classes, all the membership information, all the important links you need are linked up in the description of the video. Don't be afraid to call the office too. If you have any questions, I can easily help. If you need help with anything I've talked about tonight, give me a call in the office. I'll be here to help out. And we always got live chat in the lower left-hand corner as well. All right, guys, I'm going to wrap things up for now. Last video of the week, right? We'll come back on Monday after Easter weekend. Be well. Be nice to each other, will ya? And you better be here on Monday. Adios, amigos. Bye-bye for now.